My name is Blaine Birch, and I'm going to walk you through Dryrun and give you a bit of an idea how you can get started and get the most out of the tool. So I've just logged into Dryrun here, and I'm going to go to my plans page, and I actually have a few plans that I've already been working on, but I'm going to go to create a new plan, and I'll walk you through how you get started on a brand new plan. So if you are first entering Dryrun, you're likely to see this. And this is a brand new plan and a brand new single scenario. And so first of all, we're going to get started with this plan. I'm going to rename this plan to, so I've just renamed the plan. I'm going to rename this scenario to cash flow forecast. Now that I've renamed this scenario, I'm going to open up the scenario, use this little button right here to open it up. And you can see there's some sections here we're going to take a look at. First off, we can actually edit our month start. So let's say we have $50,000 in the bank. And you can edit this month start number at any point, so you can sort of reconcile your bank account if you need to, or for whatever reason you like, you can edit. And anything you edit always carries forward. It won't affect anything backwards. So if I actually change this to $40,000, it's going to change it to $40,000 moving forward and maintain that. Now, something we do a little bit different in Dryrun is we actually, instead of just working with your payables and receivables, we have a section that we call recurring. And you don't have to use a section, but we recommend it for things that are going to be ongoing. So let's say you had your payroll happens bi-weekly, and say it's $12,000. We're going to leave it in general expense, and we're going to repeated bi-weekly, and we're going to start on December 1st. By doing that, it actually will calculate our bi-weekly payroll every month. So you can actually see there's 3 payments in December, 2 in January, 2 in February, 2 in March, 2 in April. But the odd month, you actually have 3 payments. So you can actually see which months you have more payments. Now you can continue to add items in this area. You can also add categories. Let's say we wanted a category on utilities. We can add whatever we want here. In this case, I think I'll just add power and have it, we'll actually put it in the wrong one there. I'm just going to move it over to utilities. Now we have our power under utilities, and this one's set to repeat monthly. And you can even put in any income items. Let's say you have some rental income that comes in every month. It's something that you don't really want to worry about and tracking your payables and receivables. You can actually also drop that into recurring. So what we recommend in this recurring section is that you put anything in that it regularly happens, whether it's on a monthly basis, bi-weekly basis, weekly, anything that you don't necessarily need to track on a regular basis. And what that does is that leaves you the ability to track those key payables and those key receivables that really affect your cash flow month in and month out. So and let's say a service-based business, you may use a lot of contractors. So I can make a category for contractors, and I can add an item, and this might be an invoice number from your contractor, and we're going to put it into the contractor section. And when you're in your payables or receivables area, your repeat defaults to one time, because generally we're going to be looking at these one-time payments that are coming and going from your business. Now you can always select any of the other repeats, but one time is the most likely one that you're going to use. Now we just have the invoice number here. You may want to put the contractor's name with the invoice number, or maybe you just want it in the notes. So there's this default item that runs all the way across here. I'm going to delete that one. We're not going to use it anymore, so I'm just going to delete it. But I will add an item into here. Let's say you bought some new furniture for the office. So I put this new furniture into general payables rather than into contractors. You can make as many categories as you want. And now we move on to receivables. And receivables here, again, you can have something that repeats on a monthly basis. This default item repeats on a monthly basis. But most likely, depending on the type of company you run, if you're a project-based company, you likely have invoices that you're tracking. And so this is an invoice that you've sent out. So Biz Inc. invoice number 321. and it's for $45,000. And we could leave it in general receivables, or you can make a category out for a particular customer. Now, the one thing I should mention is that you always want to track the date that you expect to be paid, not the date you sent out the invoice. So even if you sent out this invoice on February 1st, you may not expect it in until March 1st if you're getting paid a net 30. So we would actually select a March date, and it'll jump forward into March. And now you can actually see how our cash flow is starting to work for our business. Within just a few minutes here, we've got our recurring expenses. So now within a few minutes, we start to add in some of our budget and expense items into our recurring area. We've added some payables where we've actually bought some furniture, an invoice from a contractor. And we've even started to add in our receivables. Our first one right here is an invoice we sent out, invoice 4321 for $45,000. And as we start populating more and more information, you'll get a much better idea of exactly where your business is heading. So now what we're looking at right now is the month-end figure. So that's what's on the graph, and that's what's kind of highlighted here. It shows us we started with 50,000. We had 35,100 in expenses. Here's our month end, which is also the month start for the next month. Now, if you remember, we actually had changed our month start in February, so that's where it jumps back up. Maybe we got some money in we didn't want to add into one of our other areas. We've sort of reconciled that number. Now, if we want this to start adding up all the way through again, we just go right back to the start, and basically that will reset our month start, and you can see now that it starts going down, down, down. Now, one thing we can do now as well is we can toggle to look at the total for the month of what exactly is happening in every month rather than the month-end number. So this will actually change what is graphed and what is highlighted in Dryrun. You also notice we have some arrows going backwards and forwards. Now, the short arrow just moves us back and forth by 1 month, while the double arrow will actually refresh the entire screen. So in this case, we have 5 months here. If I jump forward, it'll actually jump forward and look 5 months ahead as well. Now, a couple more things I'd like to show you in Dryrun that are kind of some nice features that can help you just do some really quick modeling, and that's these little plus minus icons that we have on the main recurring payables, receivables, and total lines. And what those allow you to do is do what's called a quick model if you click on those. So this quick model will let us just do a quick test on something. Let's say in this case in January, let's say we're going to buy $10,000 in equipment. I'm going to select dollars and save. And it just does a really quick addition of $10,000 expense into January. We can kind of see what happens there. And then we can take it off really easily without having to go in and add an item. Now, one of the most powerful things you can do on Quick Model is actually compound monthly by clicking on this little toggle here. And you can also use a percentage. So what this does is it tells you what will happen if you, let's say, add 5% to your receivables on a monthly basis. So you actually grow by 5% every month. And that gives you compound growth because you get 5% growth in the first month. Second month it goes up a little more, third month up a little more. And so you can actually see how your business can grow if you're adding 5% onto those receivables every month. Now you can also do this instead of percentage, you can do this by dollars. So let's say you were saying, what if I could grow my sales by $10,000 every month? So it continues to grow, it compounds. So we start with 10,000, add another 10,000 for 25, add another 10,000 for 35, and it just continues to grow. And it also reconciles with your receivables that you already have coming in that month. So now that we've built out a really quick forecast here, we can do one of two things. We can create a new scenario that's going to give us this new flat line here. Maybe we call this our sales forecast. And in our sales forecast, we go into our receivables and we start looking at jobs that we may be able to land. And so if I predict I'm going to be able to land a job, start working on it, and get our first payment in March, I can actually rough these in and sort of get a bit of an idea of what our sales pipeline might look like. But probably the most powerful thing you can do in Dryrun is actually open up a scenario that you already have, hit duplicate, and now you can do some what if planning. So, okay, what if this $10,000 doesn't happen? I'm going to take this quick model off, and I can do some more what if modeling. What if this invoice for $45,000 we're expecting in March actually doesn't show up until mid-April? And now we can see on this line, how does it affect our cash flow? And actually you can see it affects our cash flow a lot. We end up down into the red if we don't have that recurring income that we took off on our quick model, and then we get a late payment. It actually affects our cash flow quite dramatically. Now, if you'd like to see only one or two lines on the graph, you can click these little icons next to the scenario title, and that will allow you to show whichever graph lines you want and just focus on those lines. And also hovering over the different points on the graph will give you a little bit more information. So now you can see that we've built this out a little bit further. We can toggle again between a total or a month end. We can jog forward and back if we'd like. And we've also filled out our recurring section a little bit more. We've got a little more on human resources, utilities, IT. This could be fleshed out an awful lot more with all sorts of expenses that come on a regular basis. Our payables, again, we still have some things we need to pay here and there. In our receivables, now we actually have some subscription sales. We've got some invoices we've sent out, and that's going to help us understand exactly where we're heading, how our cash flow looks. And this can be fleshed out with an awful lot more information, but this is just a bit of a start of getting all of our information into Dryrun. And that's a quick look at Dryrun and actually getting started on adding in your recurring expenses, and even if you have some income, adding your payables, adding your receivables, and starting to build out different cash flow scenarios, sales pipeline scenarios. There's all sorts of different financial key numbers that you can evaluate in Dryrun using this scenario model. So you can look at your profit margins, comparing your actual costs versus the ones that you predicted. You can start looking at roughing out a sales pipeline and looking at how many jobs you actually are landing versus the ones that you're pitching. And it can help you identify all sorts of issues in your capacity. Now, a very important and popular feature of Dryrun is our export feature. And from here, you can actually print out this graph if you'd like to add it into a document or a presentation. But the most common one is actually exporting an Excel spreadsheet. And so first of all, you can pick your date range. And let's say we wanted to go for a full year, December 2015 to 2016. Select which scenarios you want to export. You can select all of them if you'd like. They'd all come into a different tab in Excel, and print the chart or simply click to export the Excel document. And here's our Excel document, December 2015 through 16. Here's our cash flow forecast scenario. Here's our sales forecast scenario. It's an easy way to share your data with other people in a format that's really, really common. Now, I also want to mention we have a link to our support site where we're continually adding more how-tos and information on that site. And most importantly, you can click on here and contact us at any time you have a question, and we'll get back to you right away. So thanks for watching this video on Dryrun. I hope you will check back with us often. We're working on a lot of real key features that will help you work with Dryrun faster, more efficiently, and easier. We're connecting with really popular third-party products, starting with Xero. So if you're using Xero for your accounting and bookkeeping, please give that a try. It'll actually get all of your payables and receivables automatically into Dryrun, automatically refresh all of your numbers so that you can spend time looking at the scenarios and looking at your financial forecasts. So I hope you will take advantage of using Dryrun, use it for your financial forecasting so you'll have a much better understanding of exactly where your business is going. You'll be able to identify a potential crisis in your cash flow and also model out a growth planning for your business. And please share your experience with me of what you think of Dryrun, how it's worked out for you. Any feedback you have is much appreciated. We're trying to make this product better and better for you so that it's faster, more intuitive, and easier to help you run your business better, plan for growth, and make your business stronger and more viable every day. Thanks for watching.